This week on the Trending Report, we're going to talk about America, the torn and divided, a jarring generation gap that the stock market and business in general is going to have to learn how to deal with. Let's get after it.
Welcome to the Trending Report, brought to you by USA Financial. The Trending Report is a bi-weekly show that aims to focus on the trend lines rather than the headlines. Each episode features commentary around the state of the market, as well as other factors that may impact your personal finances. The host of the Trending Report is an investment advisor representative of and securities are offered through USA Financial Securities, member FINRA SIPC, a registered investment advisor. The Trending Report is educational and not intended as personal financial advice.
As always, welcome back to the Trending Report. Today we're going to talk about America, the torn and divided. We really have a jarring generation gap. I'll do my best to stay out of politics, but it is important to understand the philosophical differences between the older generations and the younger generations, because that gap has widened to the largest that has been seen, at least in modern history. And with that, there will be impacts on businesses, which therefore means there will be impacts on the economy, and therefore there will be impacts on the stock market. So that is the angle at which we will be discussing these things. We'll also be getting into the historical data that we track for you all the time. That stock market data is ending last Friday, which is May 24. We'll be looking at its impact or influence on capitalization, everything from large cap down to small cap, on the various sectors that make up the stock market in the S&P 500. We'll be looking at some international equities, and we'll also be looking at the bond market. So with that said, let's jump right in. So America, the torn and divided, a jarring generation gap. Most specifically, we are going to be comparing and contrasting Generation Z to the baby boomers. And I'm rounding numbers a bit, but basically Generation Z are adults age 30 and below, and the baby boomers are essentially adults age 60 and above. So we've got a 30 plus year gap between these two generations. And one could argue we have an even larger gap when it comes to philosophical, to political, to moral type issues. So the first thing I want to point out to you is, again, this generation gap. And as I've kind of mentioned in the opening, the reason we're talking about this today is because if you're trying to run a successful organization, meaning a business, if you're trying to sell, build, or make products, all of these things are nuances that you're going to have to be in very good sync with, and you're going to have to somehow manage inside of your teams, which therefore means that it becomes a business function, and all business functions ultimately find their way into stock market impact. And the fact that this gap is so large and is being tracked and monitored now, probably because we've got a political season coming up, but nonetheless, these surveys and stats and things take place throughout the years, regardless. And I've just never seen them this big, and it seems like it's coming from all different angles. So here we are, Gen Z compared to baby boomers on some important issues. So in terms of patriotism, the baby boomers, overwhelmingly 76%, consider patriotism to be very important. Generation Z, only 32%. Belief in God and religion, well beyond the 50% mark at 65%, and dramatically below the 50% mark at 26% for Gen Z. And then having children being important to them. Again, over 50% for baby boomers and under 1/4 for Generation Z. And then believing that America is the best place to live. Again, significantly above the 50% mark at 66% for baby boomers, and yet coming in at only 1/3 of the population for Gen Z. So these are very big differences, bigger than we normally see. And you can see it in all different areas. So some of these are political. I'm going to sidestep that as best I can because it's really the difference that I want to focus on, not who's right and who's wrong, although obviously I have my own opinions. But nonetheless, take a look here. The dark color, the brown, is people who sympathize more with Israel. The orange is people who sympathize more with Palestine. So as you can see, the younger ages do not sympathize with Israel. They sympathize with Palestine. And look what happens as we come down. It just grows dramatically. with the much larger percentage of seniors age 65 and above supporting Israel, and a much smaller percentage of them supporting Palestine. And look at just how one goes up in one direction, the other goes up in the other direction. Now, if you're Republican leaning or Democrat leaning, you will see this is even more dramatic. Again, that's really not the issue of today's discussion, although it is something you might want to take a look at here in terms of what the trends are and who is in support of what. But more specifically, it's not the political boundary lines I'm concerned about. What I'm concerned about is the huge discrepancy based on age. Now, if we move that over to views of socialism and capitalism, obviously that hits right into the economy, that hits right into running a business. And again, we come down here to the ages. There's a lot of interesting data here you can peruse. Please feel free to stop the video, pause it, and check all of this out if you'd like. But again, I want to look at the age brackets here. As you can see, at the older ages, age 65 and above, the overwhelming 73% see capitalism in a positive light, and only 28% see socialism in a positive light. Yet when you come down to the younger ages, they actually see socialism in a more positive light than they do capitalism. And although I said this wasn't going to get political, that scares the hell out of me. The fact that as the older generation passes, the younger generation is so heavily leaning towards socialism versus capitalism that will change everything in this country. So you can take a look at the various other breakdowns: men, women, income levels, education levels, so on and so forth. But it is one of those things that, I don't know if it's an education item. I don't know if it's understanding history. I don't know if it's understanding economics. I don't know if it's understanding politics. I don't know exactly what the solution to this is, but there is a huge divide. And it is for those who have fled to this country for the opportunity it represents, this is a very scary proposition. And with that said, the perception of the country as a whole is really at a dichotomy with itself and the ages. This is the rankings of happiness. And for those age 30 and below, they have the United States ranking number 62 in the world in terms of their happiness. Yet if you're 60 and above, you have the United States ranking number 10 in the world. So these are the countries you would expect to see in this list, near or even at or above the United States. These are definitely not all the countries that you would expect to see coming in higher than the United States. And again, there's a bit of a perception problem, I believe, because if you could read all of these, you would very quickly know that some of these countries, there is no way in the world they are a better place to live than the United States. It is a dramatic discrepancy from reality. So check this out. Again, feel free to pause and go check out this study. It's World Happiness Report. This is an organization that tracks this sort of thing across the globe. They do this on an annual basis, and there's very good data there that you can take a look at if you are interested in such things. So the question is, why such a big gap? And it's not that we couldn't do the same thing on baby boomers and look at how a baby boomer has been impacted, but obviously they've been around for much longer. They've been in the workforce. They've gone through the workforce. Now we have Gen Zs at the early end, and I think what makes the most sense to me is there is an impact. There is a lingering that takes place when dramatic events occur, especially during your working years, that has to do with your income, that has to do with the threats that you feel. For example, my grandmother lived through the Great Depression, and there were things that just never sat well with Grandma having gone through the Great Depression. There were things that she did that would be unexplainable to anyone until they understood she went through the Great Depression. So the things that she would save and collect, she would save the plastic bags from the grocery store. She had thousands and thousands of them because, again, she didn't want to throw it away and you never knew when you might need it. Maybe a better example would be she would literally reuse her paper towel. So once the paper towel was used, again, any other generation would throw that out. But that generation, at least my grandmother, having lived through the Great Depression, she would literally lay out her paper towel and she would hang it and dry it so that she could use it again. She was not going to waste. She always felt like the next year could be the year again that something terrible would happen. And the same thing came with how she invested. She never put her money in anything other than a bank CD. It's the only thing she was comfortable with. And she just kind of had some very stringent boundaries that, hindsight 2020, were most likely dictated to her because of living through the Great Depression. I would argue some of those same things are happening with the Gen Z having lived through COVID, coming out of colleges and education and trying to get their first job, when suddenly people are getting laid off because of COVID, when suddenly everybody is remote, when they have no interaction with their coworkers, when they're not being properly managed from afar as they're working out of a spare bedroom, when they're not getting mentored, and so on and so forth. These things have a huge impact, and it changes how they interact with the world and with the work world. In fact, a survey here from Resume Builder says 3 out of 4 managers find Gen Z difficult to work with. And this is from surveys with Gen Z themselves. They have the highest levels of stress and burnout of any other group. 4 out of 10 Gen Z employees say they struggled to perform to the best of their abilities. So 40% of them are struggling to perform up to their abilities. And 78% of them say they will search for a new job in the next year. So in other words, they are always on the move. They are always on the hunt for the next better thing. Very different than the generations ahead of them. So this is a huge issue for companies, therefore the economy, therefore the stock market. We're seeing some impacts of this now, but we are so on the front end of this, especially given that COVID is only a couple of years in the rearview mirror. These are things that we're going to be dealing with moving forward economically, and it will be really interesting to watch how companies and therefore the stock market handles this. Now, let's change gears. Let's go into our normal data. The market itself has been doing extremely well right now. This is capitalization going from large cap to small cap. We highlight the overall stock market with the Vanguard Total Stock Market ETF so that you can kind of see the ranking based on the trend of what's above and what's below. Basically, what this is telling you is that it is large cap winning the day. The S&P 100, that's the 100 largest stocks inside the S&P 500. And then the growth segment of the S&P 500, as well as the overall index, are all coming in. So they're in a sense lifting up the rest of the market. Down here at the bottom, you see small caps represented by the S&P 600, as well as the Russell 2000 again. And then up here, we're starting to get into mid caps. But again, for the most part, we've got the small to mid at the bottom. We've got the large at the top. We're seeing green everywhere. So not only is the trend coming in positive on all categories, but so are the subsets, the sub-factors that we calculate that make up the trend score. All 6 of those are showing green across the board. We have a large trend down here taking place, and you can see that represented by this. Even though we had a dip here, we're seeing a nice rebound coming back as well. So capitalization, again, large cap winning the day, very, very bullish across the board. In terms of the sectors that make up the stock market, and we also add gold and silver into that, if we take an equal weighting of all the sectors, we show that as kind of the norm or the average in the middle. So what that tells us is what's lifting up the market. So silver and gold at the top, but then the traditional sectors themselves, utilities, financials, industrials, telecom, and information, lifting things up. Real estate, consumer discretion, energy, healthcare, actually down here at the bottom. We've got a couple of stray bearish indicators inside of the trend, but overall the trends is squeaking out green, even down to a 2 ranking on real estate. And again, we're seeing a similar trend over here that we saw on the previous page. We're seeing a similar growth line here that we saw We've got resistance levels here. We've got support levels here. So that's kind of the funnel that the market is working within, if you will. And it has been very bullish in an overall sense. Now, if we go to international equities, and again, we take the total international stock market, we then see the S&P 500. So the U.S. is still leading the way. And then we've got some European stuff up here for the most part, and some emerging markets. Down here at the bottom, we see China, Pacific, Latin America. So really some of the more mature economies that are leading the way right now. Again, still getting a good, strong trend. Similar growth patterns to what we're seeing on the previous pages. Only a couple of stray bearish subset indicators, with the overall indicators all coming in green on the trend, leaning strong to the bullish. And then finally, we have the bond market. Here, if we take the overall bond market, what we'll see is that we've got high yield corporates and short-term and intermediate corporates. So basically all corporate bonds up here leading the charge. And you'll notice down here all the treasuries for the most part towards the bottom. We do have international bond market down here, but generally from a U.S. perspective, we're seeing the treasuries ranking above international, but they are definitely below everything else in the U.S. So we did just have a little bearish trend dip over here that we've gotten a little bit above positive, but still not really looking the way you'd want it to. Here's the resistance level coming down, the support level coming down. So definitely a downward trend, tipping towards the bearish, although we are just barely green with a 3 ranking on the trend right now. So really right at that tipping point in terms of how the trend tracker works for us. So lots going on in the market. We'll continue to track this as we move forward. I was traveling for a bit there, so apologize my hiatus and missing a discussion or two with you while I was gone, but I am back and happy to share time with you. So we'll talk again soon. Thanks, everyone.
Thanks again for listening to this episode of The Trending Report, powered by USA Financial. We invite you to visit usafinancial.com to find out more about our work with independent advisors and their clients all around the country. Any projections, targets, or estimates in this report are forward-looking statements and are based on the firm's research, analysis, and assumptions. Due to the rapidly changing market conditions and the complexity of investment decisions, supplemental information and other sources may be required to make informed investment decisions. All expressions of opinions are subject to change without notice. Clients should seek financial advice regarding the appropriateness of investing in any security or investment strategy discussed.